Now, just before the show, I talked to you. I told you that we will be talking about the property sector in the country. Just yesterday, Has Consult released the country's property index, and still, housing sector is still an exclusive members-only club. Now, talking to me about affordability of the housing sector is the Jamii Bora Chief Executive Wagane Diouf. Karibu sana.
Thank you very much.
Why is housing so exclusive a club in Kenya?
Because the demand is far greater than the availability of houses,
yes.
And developers, therefore, in order to maximize their profits and to basically circumvent the issue of the lack of availability of mortgages, tend to sell their houses to those who don't need mortgages or can afford them very easily, which is basically the affluent. And that has been a trend not only in Kenya, but I think across the whole continent.
Currently, how are we doing in terms of mortgage penetration for Kenya?
Well, I think I heard of the figure of 30,000 mortgages in Kenya for a country of 40 million people. That tells you that we have barely scratched the surface, yes.
Now, when we talk about mortgages, what comes into mind is the people who can afford, who really don't need it.
Yes.
Okay? And the bulk of the population, the middle class and the lower upper middle class, don't really have access to this. What is not happening? Why don't we have facilities for this kind of group?
It's a combination of two things. I think, first of all, there are not enough mortgages available in the market just because there's not a mortgage refinancing market in Kenya and in most African countries. So that's one of the issues. The second issue is that even where mortgage is available, there is no offer at that market level. Yes. For instance, many companies have negotiated with financial providers in Kenya mortgage programs at subsidized rates. However, if you don't provide a product that the employee of that company can afford, there will be no demand for that mortgage just because the product is not there. So that's also a phenomenon. So the two combined make it very difficult to basically grow the mortgage market. The other phenomenon that's very important is we tend to forget that in most African countries, including Kenya, 70% of our economy is informal. Yes. These are people that don't have formal employment, they don't have pay slips, they don't fit in the rigid and structured requirements.
And they're all in the cities.
And they're all in the cities. It's a very dynamic, basically, economy that is very resilient, actually. When the world economy goes up and down, usually the African middle class survives just because it's not completely connected, it's informal. Now, the informality of that market makes it impossible for banks to basically provide the mortgage. Yes. The microfinance industry has made an attempt, but it has barely scratched the surface. So I think what we need to do is recognize that 70% of our economy is where the opportunity is. It's informal. We need to adapt our product, and one of the banks that we are associated with, Jamii Bora Bank, is going in that direction. We're working towards providing microfinance mortgages to our clients, and I think that's where the future is.
And just before we got into what Jamii Bora is doing, when you talk about 70% of the population, of course we're talking about low-cost housing. There have been several initiatives to try and provide low-cost housing segment, but why isn't this segment attractive to the people it's targeted to?
Well, I think, first of all, it's ignorance. I think a lot of people providing low-income housing have such a great demand that they will not basically advertise and communicate broadly. It's basically schemes that are built for a targeted population, civil servants, etc. You know, SACCOs and organizations buy a piece of land, built to address the need of a specific. But the broad market approach for low-income housing is not very common today in Kenya. There is an opportunity, there is a market, there is demand. It requires a little bit of work. It's a bit more difficult than selling houses in the 30-40 million range. However,
where's the difficulty exactly? Because I'm thinking, if you're going to put a house for 50 million shillings and you'll market it and you'll get a buyer, how much easier would it be to put a house for 1.5 million and still market it?
The difficulty at the bottom of the pyramid is, first, you need to build scale. You need scale. In order to be able to make it financially viable, you need to build a large amount of houses. Secondly, you need to bring all the solutions together. You can't tell a client, you know, my house is ready, it's a 2 million Kenyan shillings house, go and find your financing. You have to work with the client to find the financing. It means you need to bring to the table the financial intermediary, you need to basically put the whole solution together. That requires some work. There are a lot of players that you need to bring up around the table in order to make it feasible. And that's why a lot of developers shy away from that. It's capital intensive, it's, you know, requires a lot of scale, requires you need to have a social mission.
But not just developers, just to bring this to your door, we don't find many housing financiers taking up this segment. All we find is financiers are going for the top range, which you're saying these people don't really need this service. So why aren't people, financiers, going for low-cost housing? It's
the issue of the low-hanging fruit, but I think it's they go for the easy business first. But I think that with the constraints on the market now, the escalation of the interest rate, you will see more and more financial providers starting to look more seriously at the bottom of the pyramid. Secondly, the microfinance institutions have not been really focusing on housing and mortgage on long term, and have not really spent a lot of effort looking for refinancing lines in the marketplace to be able to provide 10, 15-year loans. Microfinance is typically between 12 and 18 months maturity of credit products, so they need to basically find long-term resources in order to be able to expand long-term mortgages. That part of the equation has not been really so addressed yet.
But still, when you look at the housing deficit of about what, 200,000 now?
Close to that. It's 120,000 and it's increasing by 30,000 every year.
Looking at that kind of deficit, obviously the need is there.
Yes.
Okay, the financing may not be there, but now going forward, how do you ensure that one, mortgage is not looked at as this monster, and two, that going forward it is affordable despite the interest rates and all that is happening?
I think there are two things that need to happen. One is for developers to recognize that there's an opportunity for products that are priced between 5, 6 million and 1.2 million. And that once you put those products on the market, you have a ready market of mortgageable clients that basically have this arrangement through their companies, their SACCOs, their pension funds that can acquire those products. I think that has to be a recognition. Then there's the informal sector. For the informal sector, it requires the developer to be creative, to work with microfinance institutions, with financial institutions, to come up with structured products to allow those clients to be financed.
And now, the all-important question, I know you've been waiting for this question, what exactly is Jamii Bora doing? Well,
Jamii Bora has been in the business of addressing housing issue at the bottom of the pyramid since 2004. So on the housing side, since 2004, on the microfinance side for about 15 years now, close to 15 years. So we know the market very well. And we've been building houses in Kitengela, in Isinya, sorry, outside of Kitengela, where we're trying to build a model town, where we can allow people who are today housed in slums or in inadequate housing in the city to relocate and basically raise their family in a healthy environment. We've got a school, medical facilities, social amenities. So it's basically the concept of building a small town, model town at the periphery that can basically allow people to raise their family.
How much are we talking about in terms of one unit?
Unit today, the price, at the entry level is 1.2 million Kenyan shillings for a 2-bedroom house, bungalow, and 1.6 million for a 4-bedroom house. Now, we are expanding that. So far, we've been focused on that segment of the market. We are now opening up a new segment, which is the 5 million Kenyan shillings house, which each is a little bit more into the middle income, but we think it's necessary to have blended income communities, so that first of all it adds an extra earning power within the community, so it brings additional resources within the community, and it allows to have better social amenities, better schools, etc. And it also allows us to do what we call cross-subsidization, meaning the margin that we will generate on the 5 million house will be a lot higher than the one we'll generate on the 1.2 million house, which enables us to continue to drive the price of the 1.2 million unit lower.
Okay. Oh, well, good luck. Wagane Diouf there talking about affordable housing. Good news indeed. This has been KTN Financial Markets Live on the day that Eveready East Africa is the day's top gainer at 6.45% at a share price of 1 shilling and 65 cents. Please stay tuned for more incisive look at how your business is doing later on KTN Business Today in the evening. This has been KTN Financial Markets Live. I'm Boni Tunya.